The thing is, I'm not allowed to give recommendations, but I'll tell you what I do. Because the reality is you're going to have to make the best decisions for yourself, and you want to always do your own due diligence, because the reality is investing has risks. You're never guaranteed to make money when you invest. You might even lose money, which is why you should always do your own due diligence and never blindly trust a random guy on YouTube like me. So what does that mean? I invest my money in 5 places. I invest my money into my own business and startups. I invest my money into real estate. I invest my money into stocks. I invest some of my money into crypto, and I invest some of my money into physical gold. This is the order that I invest my money from biggest to smallest. Now, I have 2 investment strategies. I have an active investment strategy and a passive investment strategy. What I've been talking about up until now has pretty much been passive investing, where every time you get paid, money automatically gets invested. And what I do is I passively invest my money into stocks, crypto, primarily Bitcoin, and physical gold. And so the way this works for me is every week I have money that leaves my account and is automatically invested into a number of different stock ETFs. An ETF is an exchange traded fund. It's just a group of companies. So instead of investing into an individual company, I'm investing into a number of different funds, which are comprised of groups of companies. So I have ETFs that give me exposure to value. This would be things like the S&P 500. I have ETFs that give me exposure to dividend paying companies. That's the biggest piece of my portfolio. Dividend paying ETFs. The reason why it's the biggest is because I like cash flow, because cash flow funds my guac flow, because now you keep getting cash without having to sell your investments. And if you blow your cash flow this month or this quarter, well, you're going to get another cash flow check next quarter. I have ETFs that give me exposure to innovation. This is more on the speculative side, like technology. And I have ETFs that give me exposure to emerging markets. Again, more speculative. So on the smaller side of my portfolio. Emerging markets are companies that operate in different countries, that operate on different currencies. So it's a way to diversify outside of the United States, but more risky because you don't have the same protections as the United States. You don't have the currency of the dollar. You don't have the safety of the United States. And so you have more potential upside, but also more risk. So when I passively invest in stocks, that's what happens. When I passively invest into crypto, well, I buy a little bit of Bitcoin every single day. When I passively invest in gold, well, I'm buying a little bit of physical gold, not gold ETFs, physical gold.
Why gold? Why gold?
Gold for me is a hedge. I don't look at gold as an investment. I look at gold as an alternative to saving. It takes time, effort, and labor to mine physical gold. And I look at gold like alternative money. Money has 2 purposes. Money is either a store of value or it is a medium of exchange. Our paper dollars are a great medium of exchange, but they're a horrible store of value because of inflation. Our physical gold is a much better store of value, but a horrible medium of exchange. So gold for me is another way of saving hard money, and it's like doomsday protection. It's insurance. So for me, it's just another way to save. I don't really care about what happens with the price of gold. I don't monitor the price of gold like that. I just buy a little bit every month and let it do its thing. Just another way to save. That's my passive investing. Now my active investing is where now I take money and I actively put it somewhere. Now right now, my biggest active investments have been into my own businesses. Briefs Media, like Market Briefs, which is my newsletter for investors. I have Business Briefs, my newsletter for entrepreneurs. We recently launched that in 2022. I have Market Insiders, and I also have a law firm that I'm officially launching. It's been around for a little while now, but officially launching in 2023. So I put my own money into my own businesses. Thank you. In addition to that, I also actively invest my money into real estate. Again, I love real estate because it provides cash flow. Cash flow funds the guac flow. I love investing for cash flow for those reasons. And I like real estate because, well, real estate gives you a tangible asset. And when I say investing in real estate, I don't mean buying a home to live in. I mean buying real estate to rent out. Then I would actively invest in stocks. If I see a good value, if I find something that's undervalued, something that I believe is low in price, I would come in and buy. I also actively invest in startups. So it's a different way of looking at it. But when I actively invest, I'm not investing in ETFs. I'm investing in individual companies. I'm being a little bit more risky here. but I also see more potential returns. I can lose more money quicker, but it's now how involved do you want to be? For the majority of people, they shouldn't be actively investing. They shouldn't be investing in individual companies, because if you're not going to be willing to do the research, if you're not willing to read the earnings calls, if you're not willing to keep up on the company, if you're not willing to put in that work, don't actively invest. Because in addition to putting in all the work, you also need the psychology education of how do you hold on to your investments when things go wrong, and how do you sell your investments when things go right. Those psychology and the actual work is something that most people don't want to do, but they hear about a hot stock, so just throw their money in there. And they might work in the short term, but in the long term, what we've seen is that it doesn't work for the majority of people because they don't know how to manage their investments, which is why for the majority of people, a passive investing system has been proven to work better.
Yeah, definitely agree. That's a great overview of different kinds of investing, from passive to active. And I like the way you separate the two as well. I don't think I've never thought of it that way. But I have thought about day trading, I think, in a similar way to you, in the sense of throwing your money into it and hoping for the best. And in a lot of cases, especially if you're not a part of that company and you don't know what's going on with that company.
Yeah, I don't trade. I don't know how to trade. I tried trading for one summer in college, and I spent a lot of time doing it. I don't think I made any money. I don't trade. I don't flip. I'm an investor. I'm a long-term investor, and that's all that I do.
Yeah, it's funny because I think a lot of people talk about, like, even myself, like I have a past of doing, like, a history of doing that for a summer, right? And then you do it for a while, and it just feels a bit like gambling. It's fun. It's, you have the ups and downs. It's like sports betting and a few things
Literally.
Like that. But I think we kind of avoid those things nowadays, probably for the better.
This is why now, when you understand this, you have to change the way you look at money and change the things that you do use with your money. Because if you're making money just to spend it, well, now you're making everybody else rich at the expense of your own wealth. What I'm saying is make yourself rich before you make everybody else rich. I don't want you to never have the nice things. I want you to have the nice car. I want you to go on the nice vacations. I want you to have the nice home, but I want you to be able to afford it first. And right now, the most important thing financially is to make yourself rich first. And ironically, the people that are looking rich are sacrificing their real richness. But if you want to actually become rich, well, you're not going to be looking rich when you're trying to become rich. So it's kind of like ironic where the people that, when you spend all your money trying to look rich, you never have the opportunity to actually become rich.